I've spent most of my life watching people invest their money, and over all these decades, through boom times and terrible times, through panics and celebrations, I've noticed something that might surprise you. The investors who do well, the ones who sleep soundly at night and build real wealth over time, they all share one particular quality. It's not intelligence, though that helps. It's not access to special information or some secret strategy. It's something much simpler and much harder to practice than you might think. When investors feel truly safe, genuinely comfortable with their investments, they do something that seems almost too easy to matter. They do nothing. They sit still. They let time pass. They resist the urge that nearly everyone else gives into, which is the urge to do something, anything, whenever the world around them shifts or shakes. Now, when I say they do nothing, I don't mean they're lazy or indifferent. I mean they've reached a point where they trust what they own so deeply that they don't need to constantly adjust, trade, react, or second-guess themselves. They've done the hard work up front. They've studied businesses. They've thought carefully about price and value. They've built in what we call a margin of safety, which is just a fancy way of saying they didn't pay too much to begin with. And once they've done all that, once they've made a sound decision based on facts and long-term thinking, they give that decision room to work. This is much harder than it sounds. Most people think they want to feel safe in their investments, but what they really want is to feel excited or to feel like they're winning or to feel like they're ahead of everyone else. Those feelings are different from genuine safety. Genuine safety is quiet. It's not thrilling. It doesn't give you much to talk about at parties. It's the absence of anxiety, not the presence of adrenaline. I've seen so many people over the years who confuse activity with progress. They check their portfolios 3 times a day. They read every headline. They react to every piece of news as if it changes the fundamental value of what they own. And all that activity makes them feel like they're engaged, like they're being responsible investors. But what they're really doing is creating opportunities to make mistakes. Every time you act, every time you buy or sell based on short-term noise, you introduce the possibility of error. You pay transaction costs. You trigger taxes. And more importantly, you step away from the one thing that actually creates wealth in investing, which is letting good businesses compound their value over long periods of time. When I look back at the best investments I've made, the ones that have really mattered, they all have something in common. I held them for a very, very long time. I bought them when they were reasonably priced, when they were businesses I understood, run by people I trusted, with economics that made sense, and then I just let them be. I didn't sell when the market got nervous. I didn't sell when someone wrote an article saying the industry was doomed. I didn't sell when the stock went up and people said I should take profits. I just held on because the original reasons I bought hadn't changed. This sounds simple, and it is simple, but simple doesn't mean easy. Human beings aren't wired for this kind of patience. We're wired to respond to danger, to react to changes in our environment, to do something when we feel uncertain. And the financial markets are designed in many ways to make you feel uncertain all the time. Prices bounce around. News breaks constantly. Other people are always talking about what they're buying or selling. There's an entire industry built around convincing you that you need to act, that you're missing something if you just sit still. But the truth is, most of the time, sitting still is exactly what you should do. Not because nothing is happening in the world, because plenty is always happening, but because most of what happens doesn't change the long-term value of a good business. A company that makes products people need, that has a strong competitive position, that's managed by honest and capable people. That business is going to be worth more in 10 years than it is today, regardless of what happens to its stock price next week or next month. The feeling of safety in investing doesn't come from knowing what's going to happen tomorrow. Nobody knows that. Not me, not anyone on television, not the smartest economists or the fanciest hedge fund managers. The future is unknowable. But what you can know is whether you're paying a fair price for something durable. You can know whether a business has staying power. You can know whether you understand what you own. And when you know those things, when you've done that homework, you don't need to predict the future. You just need to be patient. I think a lot of people misunderstand what risk really means. They think risk is volatility, the up and down movement of stock prices. But that's not risk, not really. That's just noise. Real risk is the permanent loss of capital. Real risk is paying too much for something that turns out to be worth less than you thought. Real risk is investing in things you don't understand, or trusting people who don't deserve your trust, or following the crowd into something just because it's popular. When you feel genuinely safe, when you've structured your investments properly, you stop worrying about volatility. You stop checking prices constantly. You stop reacting to headlines because you know that temporary declines in price are just part of how markets work, and they don't represent actual loss unless you panic and sell. Some of my best investment years have been years when I did almost nothing. I read annual reports. I thought about businesses, but I didn't trade much because I didn't need to. What I owned was fine, and there wasn't anything better to buy at prices that made sense. There's a story I sometimes tell about a friend of mine who bought a farm. He bought it at a good price. He knew farming. He knew what the land could produce, what it would cost to work it, what he could reasonably expect to earn from it over time. And after he bought it, he didn't check the value of his farm every day. He didn't call up real estate agents every week to see what farms were selling for. He just worked the land and collected his harvest. And over time, that farm became more valuable because it kept producing year after year. Investing in businesses should work the same way. When you own a piece of a good business at a fair price, you don't need to know what someone else would pay for it tomorrow. You just need to know that the business is going to keep producing value. The earnings will grow, the competitive advantages will remain, the cash will accumulate. And over time, the value of what you own will reflect that accumulated production, that accumulated compounding. But most people can't do this. They can't sit still. They feel like they're not being active enough, not being smart enough, not participating enough. And so they trade. They switch from this to that. They follow trends. They listen to tips. They get excited when prices rise and nervous when prices fall. And they end up buying high and selling low over and over again, which is exactly the opposite of what works. The investors I've known who truly feel safe, who really sleep well, they've all learned to stop doing certain things. They've stopped trying to predict what the market will do next year. They've stopped worrying about what other investors think or do. They've stopped looking for shortcuts or secrets. They've stopped confusing movement with progress. And in stopping all of that, they've freed themselves to focus on what actually matters, which is owning good things and holding them long enough for their value to be realized. I've always believed that if you're going to invest in stocks, you should approach as if you're buying the entire business, not just a piece of paper that might go up or down, but an actual business that you're going to own for years. You should ask yourself the same questions you'd ask if you were buying the local hardware store or the restaurant down the street. Do I understand how this business makes money? Is it a good business? Are the people running it competent and honest? Is the price fair? And if you can answer those questions satisfactorily, then you buy it and you hold it and you let the business do what good businesses do, which is create value over time. This approach requires a different mindset than what most people bring to investing. It requires you to think in years, not days or weeks. It requires you to ignore most of the noise that fills the financial media. It requires you to have the confidence to be unfashionable, to hold things that might not be popular at the moment, to resist the urge to chase whatever is hot. And it requires you to accept that you will sometimes be uncomfortable. There will be periods when your investments go down in price, when people question your judgment, when it feels like everyone else is making money doing something different. But if you've done your homework, if you've bought well, those periods are opportunities, not threats. They're chances to buy more at better prices. They're tests of your temperament, not your intelligence. The feeling of safety in investing is really the feeling of not needing to do anything. It's the feeling that comes from knowing you've made sound decisions and now you can let time work for you. It's the opposite of the anxious energy that makes people constantly adjust their portfolios, constantly search for the next thing, constantly worry about missing out. I've met plenty of people over the years who had average intelligence but extraordinary patience, and they did very well. And I've met brilliant people who couldn't sit still, who couldn't resist tinkering, and they did poorly. The difference wasn't brains, it was temperament. It was the ability to be rational when others were emotional, to be patient when others were impulsive, to be still when others were frantically active. One of the most important lessons I learned early in my career came from a man I greatly admired, my teacher, Benjamin Graham. He taught me that you should never invest in something unless you'd be comfortable holding it if the market shut down for 5 years. Think about that for a moment. If you couldn't see a price, couldn't sell, couldn't do anything, but wait, would you still feel good about what you owned? If the answer is yes, you're probably making a good investment. If the answer is no, if you need to be able to get out quickly, if you're counting on selling to someone else at a higher price without regard to the underlying value, then you're not investing. You're speculating, and speculation doesn't lead to feeling safe. Real safety in investing comes from understanding and patience. It comes from buying things that are worth more than you pay. It comes from having a margin of safety so that even if things don't go quite as well as you hoped, you'll still be fine. And once you have that margin, once you own quality at reasonable prices, the single most important thing you can do is nothing. Just let it sit. Let the earnings accumulate. Let the dividends reinvest. Let time do its work. This is where most investors fail, not because they pick the wrong stocks, though many do, but because they can't leave the right ones alone. They buy something good, it goes up 20%, and they sell to take a profit. Or it goes down 20%, and they sell because they're scared. Either way, they interrupt the compounding process. They trigger taxes, they incur costs, and they give themselves the problem of figuring out what to do with the money they just raised. The investors who build real wealth, lasting wealth, they understand that the stock market is a tool for transferring money from the impatient to the patient. If you can train yourself to be patient, to ignore the daily movements, to think in decades rather than quarters, you have an enormous advantage. Most people can't do this. Their emotions get in the way. Their need for activity gets in the way. Their fear of missing out or their fear of loss gets in the way. But the ones who can do it, who can sit quietly with good investments and let time pass, they're the ones who end up feeling genuinely safe. Not because they've eliminated risk, because you can never eliminate risk, but because they've structured their investing life in a way that doesn't require them to be right about the short term. They don't need to predict recessions or bull markets or interest rate changes. They just need to own pieces of good businesses at fair prices and hold them long enough for the value to be realized. I sometimes think about investing like planting a tree. You don't plant an oak tree and then dig it up every few weeks to check on the roots. You plant it in good soil, you water it appropriately, and then you leave it alone. You trust that nature will do its work. And years later, you have something valuable, something that's grown quietly while you were doing other things. But if you keep digging it up, if you keep moving it from place to place, searching for slightly better soil or slightly more sun, you'll kill it. The constant disruption will prevent it from ever taking root and growing. The same is true with investments. The constant buying and selling, the constant second guessing, the constant reaction to news and price movements, all of that prevents your investments from doing what they need to do, which is compound over long periods. Every time you sell something, you restart the clock. You give up all the time you've already invested. And time is the most valuable asset you have as an investor, more valuable than money, more valuable than intelligence. You can't buy more time. You can only use it wisely or waste it. When I look at people who are anxious about their investments, who check prices constantly, who trade frequently, who worry about every downturn, I see people who don't feel safe. And they don't feel safe because they've set themselves up to need things to go right in the short term. They've paid too much, or they've bought things they don't understand, or they're using money they'll need soon, or they're measuring success by weekly or monthly results. All of that creates anxiety. But the people who feel safe, they've done the opposite. They've bought at prices that don't require perfection. They understand what they own. They're using money they won't need for years, and they measure success over decades. That structure, that approach, allows them to be calm, allows them to do nothing while their investments work for them. This might sound passive, but it's not. It's active in all the ways that matter. It's active in the initial research and thinking. It's active in the discipline required to wait for good prices. It's active in the courage required to buy when others are fearful. And it's active in the restraint required to hold when others are selling. What it's not is busy. It's not constantly trading. It's not reacting to every bit of news. And in our modern world where busyness is confused with productivity, that stillness can feel wrong. But it's not wrong. It's exactly right. The one thing investors do when they feel safe is nothing. They've done the hard work, they've made sound decisions, and now they trust those decisions enough to let them play out. They don't need to watch every tick of the price. They don't need to read every opinion. They don't need to constantly adjust. They can go about their lives knowing that their investments are quietly working, quietly compounding, quietly growing in value. This is the ultimate goal of investing, at least the way I think about it. Not to get rich quickly, though if you're patient, you may well get rich eventually. Not to beat some benchmark by a few percentage points, but to structure your financial life in a way that lets you stop worrying about it. To own things that make sense at prices that make sense so that you can focus on whatever else matters to you in life, your work, your family, your interests, whatever brings you meaning and joy. And the beautiful thing is, when you stop trying so hard, when you stop constantly acting, you often do better. The returns tend to be higher when you odd less. The anxiety tends to be lower when you check less. The outcomes tend to be better when you think longer. It's counterintuitive because we're trained to believe that more effort leads to better results. But in investing, past a certain point, more effort often leads to worse results. The effort that matters is the thinking up front, the discipline in waiting for opportunity, the patience in holding. Everything beyond that is usually counterproductive. So if you want to feel safe as an investor, truly safe, not the false safety of following the crowd or the temporary safety of a rising market, but the deep, quiet safety that lasts through good times and bad, then learn to do nothing. Learn to sit still with good investments. Learn to ignore the noise. Learn to think in years and decades. Learn to trust in the fundamental value of what you own rather than the daily fluctuations in price. It's not exciting. It won't give you stories to tell. You won't feel like you're constantly winning, but you will sleep well. You will avoid terrible mistakes. And over time, quietly and steadily, you will build real wealth. The kind of wealth that comes not from being clever or lucky or active, but from being patient and rational and still. And that, I think, is what investing should be about. The markets will always be there, always moving, always offering opportunities and temptations, but you don't need to dance to every tune. You can choose to sit in a corner holding something good, letting time pass, letting value accumulate. And when you can do that, when you structured your investments so that doing nothing is the right thing to do, you've reached a place that very few people ever reach, a place where you can be calm while others panic, still while others rush, and certain while others doubt. That's what real safety feels like in investing. Not the absence of risk, but the presence of patience. Not perfect knowledge of the future, but sound judgment about the present. Not constant action, but confident stillness. And it's available to anyone willing to do the hard work of thinking clearly, buying well, and then perhaps hardest of all, doing nothing.